Yes. Hi, good evening. Please check it out whether audio and video is clear or not. Yes, please give me confirmation about audio and video clarity, ma. Yes. Thank you for giving confirmation. Yes, please give me confirmation about audio and video clarity, ma. Yes. Thank you for giving confirmation. Yes, we can wait for 1 or 2 minutes. Then after we can start straight away a discussion with the DTAA chapter. Yes, very good evening. Yes, all of you, very good evening. So now we can start with the new chapter, that is in DTAA. So double taxation avoidance agreement. So it is also forming part of international taxation, ma. It is also forming part of international taxation. So what is that weightage, sir? First, we want to know that weightage only. Yes. If you are observing that every attempt one MCQ and one 7 mark, that is also descriptive practical question they will give you. So total 9 marks. In some attempts, they are given the 2 mark question and 14 marks descriptive questions also. So how they are giving the one more extra descriptive question, sir? They are reducing the weightage of transfer pricing chapter and they are giving the weightage to this chapter. So don't think about the yes, what is it, weightage or etc. Definitely it is a worth chapter. In simply during that exam day preparation also, if you allocated minimum 30 minutes, definitely you will get average 9 to 10 marks. Now we can start our discussion with the basic points. Yes, I will try to cover that every area in this chapter because this chapter is important. So try to bear with me for like 2 hours, like excess 15 minutes or 20 minutes also, but I will try to close it down within 10:30 only. I have other works also. So that's why definitely I will give you that entire content within 2 hours limited time. So what is that full form? Double tax avoidance agreement. So basic points you have to understood. Then after we can go for the further points. First, in India, how we are giving the tax treatment for the resident and ordinary resident? Yes. So for resident and ordinary resident in India, entire global income is taxable. Sir, I am a resident and ordinary resident, sir. So that's why I need to pay the tax on the global income. What do you mean by the global income, sir? Indian income plus foreign income. This is only called as global income. So that's why definitely if you are a resident and ordinary resident, your tax burden will be high in India. Now, so another dimension, sir, if non-resident is there, only which income is taxable in India, ma? Indian income. Sir, American person, example, USA person, and he is a resident in USA, just for 1 week he come to India. In that 1 week he had Indian income, sir. So that only Indian income is taxable. Only Indian income is taxable in the hands of non-resident. Now I am talking about the tax treatment in India. So definitely Next, further example for our entire chapter, we are taking this example only, ma, listen carefully. Resident and ordinary resident, he is a Mr. A. He having that Indian income. What is that Indian income he have, ma? 10 crore. What is the foreign income he have? USA country income, that is a foreign income. Yes, 2 crores. So what is the taxability in India? I think you know, taxability in India based on which rule, ma? Resident rule. Because you are a resident and ordinary resident, that's why entire global income is taxable in your hands. What is that global income, ma? Indian income plus foreign income, that is both totally altogether taxed in India. Now, what about the foreign countries, sir? Foreign country also will collect the tax based on source rule. Remember, India always collect the tax based on the resident rule. Foreign countries will collect the tax on what are source rule. Now, based on source rule, what is that amount earned in the USA? What is the source of income earned by the Mr. A in USA? 2 crore. That's why. What is the taxable amount in that foreign country, ma? 2 crores. Now, Mr. A is paying the tax in India on 12 crore, in foreign on 2 crore. So now, please type your answer. What is a double taxed income, sir? 2 crores taxed here also and 2 crores taxed in here also. That means in India also amount is taxed, in USA also amount taxed. So what is a double taxed income? 2 crore. Definitely it is a burden to whom? Mr. A. So now for double taxed income only, yes, we want to provide the relief. We want to provide the relief. Remember, sir, definitely most of the cases we want to provide the relief to whom? Resident and ordinary residents only. Because in India also foreign income is taxed based on resident rule. What about the foreign countries? Or foreign country also will collect the tax based on source rule. For this only we want to provide the relief. Are you clear, ma, up to now? Now I will tell you. I'm introducing the two sections here itself. Listen. Section 90 or 90A. Next one, section 91. These are only the 3 section numbers you have to remember in this chapter. Sir, what is a section 90, 90A? Sir, I will tell you. Sir, first, I want to take the section 90. Next one, I want to take the section 90 capital A. Yes, ma'am. Remember, if Indian government, that is a central government, like USA or any other government, if both the countries are entered into agreement, so that agreement is called as what? Double taxation avoidance agreement. So that is governed by section 90. Both the countries' governments, respective governments, if entered into agreement, that is only section 90. Now, sir, Indian side, RBI is a specified association like Bankers Bank. Yes, for USA side also, yes, ma, nothing but specified association is there. Yes, both the specified associations are entered into agreement in order to provide the relief of double taxation, that is governed by section 90A. That is governed by section 90A. So then what about the section 91, sir? Yes, remember section 91, if there is no DTAA, how we are going to provide relief? If there is no agreement between the countries, then how we are going to provide the relief? So now I am asking one question to all of you. Sir, what is the use of this double taxation avoidance agreement, sir? Many of you saying easily, sir, in order to provide the relief for double taxation, here also you can say in order to provide the relief for double taxation. Yes, but one more reason is there. Any idea? Any one of you? What is that reason behind the many countries are entered into that agreement with the other countries' governments also, or other countries specified association also? One of the reason I will tell you, in order to provide relief. Yes, super. In order to exchange that information. Exchange of what? Information. Thank you. I am very happy. I think I don't know. So because whatever I said in that classes, that may be UO class, regular class, or fast track, so that students are given the reply, na, that's happy only. So I hope these are only the points you can get in that exam also. Yes, ma'am. Now, remember, sir, what happened if there is no DTAA reliefs? Sir, if we are not providing the relief, what will happen, sir? Definitely. So this fellow will avoid the, or will evade the tax on that what ma 2 crore. He will disclose only that what ma Indian income. He will not disclose that what foreign income. Remember, if you are framing a structure for providing the relief, then all the persons will disclose their information related to income properly. If you are not providing this type of reliefs for double taxation, automatically all the SSEs will escape the income from the tax easily. So now please remember section 90, 90A. So there is a DTAA. Section 90 means what, ma? No DTAA. Just give me confirmation about up to now, ma. So are you clear up to now? If you are having that clarity about this discussion or example or introduction, whatever it may be, we can straight forward. We can go to that what, ma, further concept, and we can do some questions also directly. Yes. Now all of you needs to remember this page chart. Definitely all of you try to remember this page related chart totally. Yes. What is a relief? You know, if any double taxation is there, then we are going to provide the relief. Now, sir, first type of relief is bilateral relief. Bilateral means nothing but the both the sides we are agreed to each other. Both the sides we are agreed to each other in order to provide this relief. That is only called as what, ma? Bilateral, and that is only the governed by section 90, section 90 or 90A. Another side, if you are verified that, give me 1 minute. Another side, if you are verified that there is an unilateral relief, means what? If there is no DTAA, then from our Indian government side only we are going to provide the relief. That's why that is only called as unilateral, single side relief. So this is an DTAA and no DTAA, section 91. Now, first for 1 hour we can concentrate on the bilateral relief. First we can concentrate on the bilateral relief. First, it is called as what, ma? Exemption method. It is called as what, ma? Exemption method. Now, second type of method is tax credit method. In CA final, only we have these two, ma. Only we have these two. But in CMA final, we have different methods. I think some of you only know about these methods, names also. The remaining students only know these two. But in our CMA final syllabus, we have an depth discussion relating to all these methods, and we are getting the questions also from these methods only. So first, overall, if you are classifying, it is an exemption method A. Second one is an credit method B. Now, in exemption method, we have an two, ma, full exemption method, and second one exemption with a progression method. So now if you turn to that next page, I am given this some lines relating to this, listen carefully. Tax exemption method we have. In the tax exemption method, we have a full exemption method or exemption with the progression. So what do you mean by the exemption method? And in this exemption method, how we are providing the relief, we can check. How we are providing the relief, we can check now. Now remember, now remember, so how we can give the relief under full exemption method? First we can discuss. Remember, exemption means what? That amount is exempt completely from taxability. Resident country, that means India, give up its right to collect the tax on what income? Foreign income. Then source country means what? Foreign country have an exclusive right to collect the tax on such income. So this is only exemption method. Remember, resident country, yes, what is doing? Resident country is given the exemption for the foreign income for collection of tax. Then what about the source country? Source country only have an exclusive right to collect the tax on such income. So it is only called as what? Exemption method. It is only called as what? Exemption method. Now I will open the workbook and we can discuss one question from the exemption method if possible. Okay, we can discuss the one question from the exemption method if possible. Sir, there is no such type of question. Okay, but in handwritten notes I included one. Yes, ma. Remember, here I will tell you this example. Just it is not a important also, but we have to remember. So resident and ordinary resident is there. What is that income? So Indian income 7 lakh, foreign income 5 lakh, and this amount is given, but it is not taxable. Remember, in inter level itself, you know this point. Past foreign untaxed incomes are brought to India. In earlier years, that amount is not taxed. So past untaxed income now brought into India, that is not taxable. If you don't know this point, entire problem will be in risk only. It is an MQP problem. Yes, it is an Indian income, it is an foreign income, this amount is not taxable. Then we have to calculate tax liability under tax exemption method first. Yes, now I want to calculate the tax liability under exemption method, that too full exemption method. Simply, we can collect the tax only on Indian income. Foreign income is completely exempt. Who can collect the tax on foreign income? Foreign country only. So then you can calculate the tax liability. Here SSE is following the normal tax rates and so now you can calculate the tax liability including education cess directly. Now repeat the sentence. If you have an urge, you can type also. What is that full exemption method? How we can provide the relief? Simply, resident country will give up its right to collect the tax on foreign income, but a foreign country have an exclusive right to collect the tax on such a foreign income. Now, I want to tell you exemption with the progression method, and we are getting the questions recurringly from the exemption with the progression method. Sir, in exam they will give you that method. Don't get tension about the what is a regime, etc. In exam they will give you that method. Don't get the tension about it. In nearly 6 attempts are gone. Yes, they are given the regime, but students still they are thinking about this, or which regime we have to calculate. Don't get tension. Definitely they will give you what is the rates you are going to follow. Clearly they will give you. If they are not given, you can follow your assumption. Yes, normally for an individual you have to follow the default tax regime as an assumption, but they will not give you that type of chance to you also. They will give you the regime definitely. Don't think about it. Now, what is that exemption with the progression? Now I will tell you. What is that exemption with the progression? Now I will tell you. It is your study material example. With this example only I will tell you what do you mean by the exemption with the progression method. So now, Indian company ABC Limited, Indian sources related income is 75 lakh. Foreign sources income is 35 lakh. Now, foreign sources income is nothing but what? 35 lakh. So now they are asking, please calculate the relief as per exemption with the progression, and after relief, what is the tax liability they are asking. So now, forget about the full exemption. Now we are in that exemption with the progression. Now, Indian income and foreign income all together, please include, and how much amount it will be? 1 crore 10 lakh. Now, please calculate tax. It is a domestic company. Okay, they have not mentioned anything about the turnover related to 20 to 23. That's why you can take the what? 30%. You can take 30%. That is 33 lakh. Then education says you have to apply tax on tax education. Surcharge. Tax on tax, that is a surcharge 7%. Domestic company, yes, total income more than 1 crore. That's why you have to collect the 7% on 33 lakh. Then please add the education says at the rate of 4%. What is the tax rate? Tax liability we got 36,72,240. 36,72,240 you will get. Sir, on what amount we are collected this tax 1 crore 10 lakh. So please calculate average rate of tax. Please calculate average rate of tax. So while calculating the average rate of tax, on this amount we collected this tax. So that's why amount, that is tax payable, divided by net total income into 100, you will get this rate. Remember, because of this income included in India while collecting the tax, we have a chance to collect the surcharge. Remember, sir, if I am not included, this is 75 lakh only, we can collect 30% plus 4% only. Because of including this foreign income in India while calculating the tax, we are increasing the rate. Am I correct, ma? That is only the progression. Now we are increasing the rate by way of including the foreign income in India while calculating the tax liability. But double taxation is happened. Foreign country income is taxed here, but in foreign country also they are taxed how much? 35 lakh. For this amount we are going to provide the relief. So now please provide the relief. After relief, before relief, this is a tax liability. Now we are going to provide the relief by using the same rate. Yes, 35 lakh is a double taxed foreign income. In foreign this amount taxed. Now also this amount, now in India also this amount taxed. That's why we are going to provide the relief, that is 33.38. Yes, we can calculate the relief amount. This is only the tax liability after relief. Simply, we want to increase the rate. That's why we are included the foreign income in India. Now, sir, if I am not included, then I have a right to collect the tax only 30 plus 4% only. Now I am increasing the rate. Now, after that, I am providing the relief with the same rate only for double. Sir, if they are given that MCQ shortcut, you can calculate 75 lakh. So normally these two only I have a chance, but in exemption with the progression, I am increasing the rate with the surcharge. Now this is only the tax liability finally. This is only the tax liability finally. Now, sir, in exam, how we need to identify whether this problem related to full exemption or exemption with the progression? That is only the difficult task for the students. That is only the difficult task for the students. Now I will tell you, in our material, two problems are there, you can solve easily, but I will tell you, sir, how to identify the problems relating to exemption with the progression. So simply, Sri Anuj is a resident and ordinary resident. His income from India, so this is an Indian income and it is a foreign income country. So it is nothing but investment PPF. They are given for ATC deduction knowing purpose. So India has a DTAA with the country jet. There is a DTAA. That's why it is a bilateral relief only. According to that agreement, what is the line? Please check it out. Income is taxable in the country where it, in country in which it is earned. That means what, ma? Whenever you are earning that income in country jet, that amount is taxed. Okay. Not in other country. That means what, ma? Not in India. However, this line is very important. Yes. However, in other country, that means other country means India, such income can be included for the purpose of computation of tax rate. This is only the line related to what, ma? Exemption with the progression method. They will not give you, sir, please calculate the tax payable after relief as per exemption with the progression. If they are given, okay. If they are not given, by using these lines. That means, sir, if I am taxing only 3,40,000, low slab only, if I am included, definitely it is a more than 5 lakh. Now we are in the 5% slab because SSE is following the normal tax rates here. So just if I am collecting the tax on 3,40,000, 5% slab only, and if I am adding the health and education cess, then only I have. But if I am included both the things, definitely I will reach to that what, ma? 20% slab. So more than 5 lakh, 20% slab, then I can pay the what, ma? Health and education cess also. Now we can refer the meaning, ma? Here, income from the source country means what, ma? Foreign country, considered by the resident country means India, only for what purpose? Rate purpose only. Finally we are providing the relief for rate purpose only. Are you clear? Sir, please listen concepts in a clear manner, sir. Company, sir, please, sir, that is a 30% tax rate, sir, not slab rate, sir. Companies are SSE, please. No. One more question they are given in that past examination. Now you have to identify question number 2. Yes, question number 2. Mahesh is a resident and ordinary resident. I am not solving the question, ma. Easily you can solve the question. But remember, many students are asking, sir, why you are not considering the lower of the Indian average tax rate as well as the foreign tax rate? It is an exemption with the progression, ma. We are increasing the rate. So what is the rate we got, ma? 3.63. With that rate only we are providing the relief on foreign income. Are you clear, ma? Now, second question, you will get the same lines, ma. According to that ADT means what, ma? Avoidance of double taxation. In some exams they can give you it as an ADT also, avoidance for double taxation, agreement for avoidance of double taxation. According to that agreement, income is taxable in the country in which it is earned. That means in source country you are earning, and in that country only that will be taxable, not in resident country. But this line is important. I am highlighting with the pink color. However, in other country, such income can be included for the computation of rate. Means what? Exemption with the progression. Don't forget. Exemption with the what, ma? Progression. Now, next. So here also they are given the SSE following the normal tax rates only. In exam they will give you about the tax regimes, ma. Don't think about it. So based on my expectations, always they will give you the normal tax rates only, because only you will get an idea about the chapter 6A deductions. If they are following that 115 BSc, no need to think about the chapter 6A deduction. No chapter 6A deductions will be available. But definitely they will ask you the problem to solve based on the normal tax rates only. Then only our chapter 6A deductions related knowledge can be tested. So first question also related to which method ma? Exemption with the progression. I am asking to all of you. So now you can identify so how they are asking the questions in that exam. Many students are going to solve only one model, that is a 91. It will not work out ma. It will not work out. Definitely it will not work out in recent exams. This is only the past examination question given for the 4 marks in June 2023. New syllabus. Same question we have in our study material also. They are asking the what directly they are given. So please calculate the exemption with the progression. But now they are given the rates as an 115 BAC rates. So Indian income is there, foreign income is there. But foreign income will be considered in India for the purpose of rate increasing only. After calculating that average tax rate, we can provide the relief by using that average tax rate only on foreign income. So give me confirmation about are you understood the exemption with the progression method as well as exemption with the progression method as well as full exemption method. Please give me confirmation about your understanding. All of you please try to participate, then only I can know about how much you are understanding, and I can increase the explanation or I can decrease the explanation also based on your responses only. Otherwise I can assume my voice is not clear. Now in our workbook they are given some questions. Now so this is an question number 1 by reading this question you can take 1 or 2 minutes. By reading this question, you can take 1 or 2 minutes, and they are asking tax liability in India. There is a DTAA also. So, please tell me under which method we can provide the relief here. By reading this line, you can say, can you tell me what is that method they are asking? Now, type that method name. Don't ask that question, Minu. In future, I will tell you. In future, I will tell you. Here, what is that method, ma? Exemption with a progression. Exemption with a progression. So, no need to consider the foreign tax rate here. Only average tax rate we have to calculate. Average tax rate we have to calculate. That too in India. So, by using that average tax rate in India only, we can provide the relief. We can provide the relief. Clear? So, now, thank you for giving the response, ma. Now, so A method is over, that is an exemption method is over. Now we can go with the next method, that is a tax credit method. In tax credit method, we have direct credit, that is an what ma? That is an 3, I will start. Indirect credit, 5th one, special credit method we have. To be honest, I am asking to all of you, except my regular classes as fast track students, do you know all these methods earlier itself? So I am not asking my students, that means regular fast track or EVO or any other students. So all other students, do you know all these methods name? Exemption with a progression, full exemption, full credit, ordinary credit, underlying tax credit, tax sparing. Do you know these methods names earlier? So if you are following ICMA study material, you will know. Otherwise, if you are following CA materials, you don't know about these method names also. Now, so first we can concentrate on the super. No problem. Now it might be new to all of you. You can revise the session again, then you will get the more and more clarity. Only 2 methods you know. But in our study material, exclusively CMA examination, if you haven't doubt, you can open this June 23 examination question paper. You can verify whether this question is there or not. Whether this question is there or not, you can verify. Now, Act is same, but the depth is different in the both the CA and CMA final syllabuses. Now remember, ma. So now we can concentrate our discussion related to direct credit method. In direct credit method, we have two methods, ma. One is on full credit, second one is an ordinary credit. One is an full credit, second one is an ordinary credit. But I will explain you again. Exemption method means resident country. So again I am explaining, ma. Tax exemption, within that full exemption means resident country give up its right to collect the tax on foreign income. That means Indian country will give up its right to collect the tax on foreign income. Foreign country only will collect the tax on foreign income. Exemption with the progression means in India, while calculating the tax liability, we can consider the foreign income only for rate increasing purpose. After calculating the average tax rate, with that rate only, we can provide the relief on foreign income. Relief on foreign income. Now, so now we can start our discussion. Forget about these two methods first. Now we can start about the direct credit method. Sir, here credit means you know already. So input tax credit, TDS, TCS are advanced tax credits. That means you can reduce this amount. Credit means normally we can take it as a credit means reduce. I will tell you what do you mean by the full credit and what do you mean by the ordinary credit. So now in the next pages we have a discussion related to tax credit method. The first one is tax credit method. In that first we have an direct credit. In that direct credit only, first one is an full credit method. Second one is nothing but ordinary credit method. Now concentrate on the full credit method, ma. So directly we can solve one problem for getting the clarity about the full credit method. Okay, directly we can solve one problem related to full credit method. Now yeah. I want to solve the question number 6, ma. I want to solve the question number 6. By reading that question only itself, you can understood under which method they are asking the tax liability after relief. So he is a resident Indian. He is deriving that income from the income for the previous year and assessment year 25-26. So income from profession in India, this is an Indian income. Income from the foreign country, this is a foreign income. What is the rate of tax levied on that income in foreign? 5%. Now compute Indian tax liability. They are asking the Indian tax liability. Okay, we can calculate as per treaty. Treaty means what, ma? Agreement. There is a DTAA. So 4,50,000 is taxable in India. So that means 4,50,000 taxed in foreign as well as taxed in India. Now this is only important, right? However, foreign tax can be set off against the Indian tax liability. Indian tax liability. So SSE following the normal tax rates, ma. Now what is that gross total income? Please calculate. Yes, this amount is taxed in India and this is also taxed in India as per the agreement. So that's why 6,94,000. There is no chapter 6A deductions information, ma. So that's why it isn't total income. SSE following the old rates. So that's why you can calculate the tax including education says yes. SSE is they are not mentioned. That's why I can assume that is an 2 lakh, below 60 years 2,50,000. 2,50,000 exempt. Next 2,50,000 5%. Next, yes, what is that amount is more than 5 lakh, ma. So 1,94,000 into 20% plus add that health and education says all together you will get this amount as a tax liability. Am I correct, ma? Please calculate and give me confirmation about the tax liability, ma. 53,352. But they are saying while you are paying the tax in India, whatever the foreign tax you paid, can you tell me what is that foreign tax, ma? 4,50,000 into 5%. 4,50,000 into what is that foreign tax rate, ma? So 4,50,000 into 5%, it is an 22,500. Clearly they are saying whatever the foreign tax you paid, you can take it as a credit. That is only direct credit method. That is only direct credit method. Relief under section 90 under direct credit method, after relief, this is only 30,850. What is that amount, ma? 30,850. Are you clear? So now we can discuss the theory related to full credit. Tax paid in that source country means what, ma? Foreign country is allowed as credit while tax paying in the resident country. So can you tell me source country means nothing but foreign country? Yes, you will get the yes, that is while you are paying the tax in India. This is only full credit. This is only called as what, ma? Full credit. Whatever that amount you paid in the foreign country, entire amount you can take it as a credit. Okay, we can verify whether is there any question related to yes. No, we don't have any question, ma. No problem. If we solve the one thing, na, that's enough. Now, next I want to solve the one question related to ordinary credit. So after that we can discuss the what, ma? Both the methods together, some problems. Remember, question number 3, it is a past exam question, and if you understood this question example number 3 only, then you can understood about the ordinary credit method. Easily anyone can understood the full credit method, ma, but ordinary credit method is important. Yes, remember, hero is an Ramesh is a resident of India, is an employee of X Limited. So he went 3 months assignment to that country. Why? That means for 3 months he going to that country way for doing the some job. Total salary is 18 lakh, in which 6 lakh related to what, ma? Country Y income. So in country Y, what is the tax rate, ma? 25% without basic exemption limit. That means what, ma? Flat rate. So total income is 18 lakh, ma. Out of that 18 lakh, 6 lakh and in which country, ma? Country Y. What is that Indian income, ma? 12 lakh. Foreign income 6 lakh. You have to understood from these line. So tax liability they are asking under full credit method. You know what do you mean by the full credit method? Can you tell me how much credit we can take directly? The 6 lakh into 25%. 6 lakh into 25%, whatever the tax paid in the foreign country, you will get it as a credit in India. But now ordinary credit method related also we can calculate. Assume that SSE he opted the what, ma? 115 BAC. They are given the 115 BAC instruction. That's why you have to take that rates only. So now for this we can open this type of format. It will become very easy, ma. So in India, what is that amount is going to be taxable, ma? 12 lakh Indian income plus 6 lakh foreign income. Global income is taxable because you are an resident and ordinary resident. Next, in country by only the foreign income is taxed. What is the tax rates? They are clearly given. What is the tax rates, ma? They are clearly given. Now, so tax liability we can calculate, ma. That is tax liability before relief. In foreign it is in easy, ma. 6 lakh into 25%. 6 lakh into 25%. What is that, ma? 1,50,000. In foreign you paid 1,50,000. In India, please apply the 115 BAC tax computation. 115 BAC tax computation. And sir, many students are doing this mistake. Right? What is that? They are calculating these slab rates related tax liability on calculator. They are directly written this amount. That will not give you that marks, ma. So remember, please apply all the things including cess. What is that amount you got, ma? 2,39,200. So now I want to calculate the tax liability by using full credit, ma. So whatever the tax amount you paid in the country by, that entire amount you are getting it as a credit. So what is that amount of the tax liability after relief, ma? 89,200. So ordinary credit, it is an important. Now I want to tell you how it will be worked out. How it will be worked out. Now remember, sir, what is the tax payable in India before relief? This amount. Full credit means easily, total amount you can take it as a credit. Now, I will tell you simple one. Ma. Ordinary credit means lower of the following. What do you mean by the lower of the following? First one, 1,50,000. What is that? 1,50,000 means full amount or remember, if this 6 lakhs foreign income is taxed in India, suppose, what is that, ma? If this 6 lakhs is taxed in India, at what rate? So can you tell me how much you can collect the tax? So that you can calculate. That is only here. Sir, in India, average tax rate, please calculate, ma. Average tax rate is 2,39,000 is an tax payable. This is an amount divided by total income, that is an what, ma? 18 lakh. It is only what, ma? Average tax rate. So please apply that average tax rate on the 6 lakh. So that means you paid the tax on 6 lakhs in, yes ma, tax on 6 lakhs in which country, ma? Foreign country, as on 1,50,000. Now I want to calculate, so tax on that same amount 6 lakhs in India. So this is an amount. What is that amount you will get, ma? 79,993. So I will not give you the full credit. Ordinary credit means, sir, in India, if that 6 lakh is taxed, I can collect this amount of tax only. So that's why I will give you the same amount of relief, whichever is lower. Whichever is lower. Yes, remember, many students are by-hearting the equation. No need to remember. 6 lakh is taxed in foreign country. What is the tax you paid? 1,50,000. Under full credit, I will give you. But ordinary credit, that amount is restricted with. 1,50,000 is restricted with. Same foreign income. If that is taxable in India, what is the rate? No need to calculate tax liability, ma, because you can calculate average tax rate, that is 2,39,200 tax payable divided by total income into 6 lakh. If you are calculated, this is only the tax on what, ma? 6 lakh. So now whichever is lower, that is only credit. So this is nothing but what, ma? Average tax rate into 6 lakh we apply. So I hope are you understood the, yes ma, ordinary credit. Now I will read the ordinary credit. So which country wants to give the credit, ma? Resident country means nothing but what, ma? India always wants to allow the credit. Tax paid in source country fully or restricting is there, ma? Restricting is there. But what is a restricted amount, ma? Income which is attributable to, income taxable in a resident country. Can you tell me, if that income is taxable in India, what is that amount of tax we are going to collect? That is only we have to restrict. So now, can you tell me, in foreign you paid what, ma? 1,50,000 in our example. But I am not giving that. If that 6 lakh is taxed in India, what is that amount of Indian income tax we are collecting on that 6 lakh, ma? 79,733. That amount only we are restricting. Now, so in full credit you can take the total amount, but in ordinary credit you can take whichever is lower, because the theory clearly given restrict. Now, the same question is given in the next our examinations also. Now I will try to give you that question, ma. Question number 5, the same question. Question number 5. Can you tell me what is that question number 5, ma? Full credit method as well as ordinary credit method. Full credit method any person can do, ma. Ordinary credit method related theory only you have to remember. Are you clear? Yes, one more question I am given. Full credit and ordinary credit. Same. I think this is a question in our example only, ma. I think whatever that handwritten notes example, this is only. So additionally, if you want to do the practice, yes, you can solve the question number 4. Are you clear with the direct credit track? All of you, please give me response. Are you clear with the direct credit method? Direct credit method, under that how many methods we have ma? Full credit, ordinary credit. Yes, sir. To be honest, I will tell you, if you are listening these method names first, that means for first time, it might be difficult to understood, sir. So you can mix up the all the method names with the other methods. So don't do that. Yes, please open this page and you can remember under bilateral credit we have in broadly two methods: exemption, credit. Under that exemption method, full exemption method is there. What is that full exemption method ma? Resident country will give the exemption to the foreign income. Foreign country can collect the tax only on that foreign income. Exemption with the progression, resident country, that means India, will collect the tax also on the foreign income for increasing the rate purpose. After that, with the average tax rate in India only, with that rate only we can provide the relief on foreign income. Next, coming to the tax credit method, first we have a direct credit. Credit means nothing but already paid in the foreign country, full amount here we can get the credit. Yes, there isn't some restriction with the credit amount, that is only ordinary credit. So what is the restricted ma? Full amount or the same amount if taxed in India. What is the tax amount? So foreign tax amount, yes, foreign tax amount, or if that same foreign amount is taxable in India, what is the tax you are going to collect? Whichever is lower. Now, I want to start the special credit method first. What is that example they are given for the special credit method, tax sparing method? Okay, all methods are tested at least once in exam. This is not at all tested. That means we can expect the tax sparing method. It is an example for the special credit method. What is the difference between exemption with the progression and ordinary credit method? Yes, the same thing. Yes, ma'am. That is only the restriction allowed for the ordinary credit. Sir, exemption means one different word. I think you can easily remember, that is not taxed in India, but rate purpose only we are adding. Then after we are giving it as an what ma? Relief only. Yes, two methods are different. First time if you are listen again. Okay. First time if you are listen again. If I am saying this word, definitely you can hurt also. Exemption with the progression. Still I am repeated only. Exemption with the progression means foreign income is taxed in India for the purpose of increasing the rate purpose only. After that we are providing the relief with that rate only. Credit method means, ordinary credit means both the countries are taking the tax treatment. Now, please remember, ordinary credit means here we paid the tax, here also we paid the tax. But whatever the foreign tax you paid, whatever the tax you paid in the foreign country, that is now you are taking the credit. Full credit. Ordinary means there is a restriction. That is only the point. Yes, that is only the point. Yes, two methods are different methods. You are asking two different methods. Remember these lines, then only you can do the problem. Remember the lines, then only you can do the problem. So how they are providing the relief under every method they are given the theory. So okay, now I will allocate the 5 minutes for clarifying your doubts. Don't think about it. Yes, if you have any doubt, yes, you can ask. Otherwise, if I'm forwarded to the next methods, maybe you can get some more confusion. That's why please ask me. If you have any doubts, you can type. No issue. Yes. Jatin Verma, exactly. In ordinary credit method, we are comparing the foreign tax, how much you paid, and the same foreign income, what is that Indian tax you paid. Whichever is lower only, we are allowing it as a credit. Next. So, shall we go with the sparing method, ma? Shall we go with the sparing method? Tax sparing method. I'm expecting the tax sparing method in the upcoming exam. I'm expecting the tax sparing method in the upcoming exam. So after the completion of these all the methods, I will explain you again what is the theory behind it also. If you are losing the hope now, we can't do anything wrong. Don't lose the hope. This is a very easy chapter for scoring the 10 marks. So many students are relying on section 91 only. Yes, if it is given, okay. Otherwise, you can struggle for the 10 marks. That's why. Now, sparing method you can start, ma. We can take this example for better understanding of the sparing method. After that example, we can read the theory also. Can you tell me? A Limited is a parent company. It is located in country X. It having the branch in country Y also. Branch ends the profit. Can you tell me branch ends the profit in which country, ma? Country Y. So if you are observing that parent company is located in country X, branch located in country Y. Now, country X is taxing that income on residents on their global income at the rate of 30%. Now, tax rate in country Y is 25%. These lines are very important, ma. Our study material question I am given. However, it is a measure to promote the economic development. There is a like SEZ, country Y. Please check the YouTube community post here. Yes, if you want to know about the schedule, please check the YouTube community post. However, a measure to promote the economic development therein like SEZ, country Y is not levying any tax. In India also we have in special economic zones, you know. So there is a tax haven jurisdiction. In country Y also in some cases they will not levy the any tax. But general rate is 25. In India also normal tax rates is there. But if you are doing the business in SEZ, no need to pay tax. So now, between country X and country Y, there is a provisions for DTAA is tax sparing. Please calculate tax sparing or tax liability. If branch operating in SEZ area and in country Y, there is no tax. So this is an exam question also and past exam question and as well as study material. So I think not past exam, MQP question, remember. What is that branch income at 10 lakh? Sir, in branch we are not collecting any tax because in country Y that is operating in SEZ area. So that's why we are not collecting any tax. But country X related, what is the total income? They are taxing on global income. That means this amount is taxed here also. Because they are taxing on which income? Global income. They are taxing based on global income. Now, so tax liability before relief, what is the rate they are mentioned at the rate of 30%? 3 lakh. No. Sparing means nothing but even though you are not paid any tax also, we are treated as tax paid. We are treated as what, ma? Tax paid here. Can you tell me what is that amount of tax we can pay if that is not operated in SEZ area, ma? 25%. That is an 2,50,000. So that is only we can take it as an relief. Even though you are not paid tax actually, if they are collecting, what is that amount they can collect? 2,50,000. Now we can take that amount only as a credit. That is only sparing, even though not collected, but we are deemed to be treated as they are collected only. So that same amount we can take it as an what relief as per tax sparing provision. Now you can remember the theory. Now you can remember the theory. What is that So resident country means nothing but what India is allowing the credit. Yes, deemed tax paid on income in the foreign country. That income is not taxable actually, but we are treating it as an we are paid the tax. The tax amount only we can take it as what credit. That's why it is a tax credit method. One example, special credit. Even though you are not paid, you are taking the credit. That's why it is a tax sparing method. Clear That's why it is a special credit method. Are you clear? Give me confirmation about understanding about this sparing method also. If you understood this sparing method, then I can start the last method, that is an underlying tax credit method. That is only example of what indirect tax credit method. Indirect tax credit method. Shall we start Now next one. Listen again you can no issue. If you don't know these methods, if I am taking it will take up to 12 also. I don't want to take again. Oh, you can listen again also. Now, in revision time, yes, you can follow. Tax percentage is 35 means we can take the credit up to that amount of tax. I think you are asking the doubt. I will tell you. Sir, student asking the doubt. Sir, here tax rate is suppose 35. What is that amount of credit we can take Only to the extent of 3 lakh only we can take credit. Because 35 means that is in 3,50,000. But in India, what is the tax 3 lakh. That's why we can restrict it to the 3 lakhs only. So out of that, you can't expect the refund. Sir, here I have a right to take the like a 3,50,000. Sir, give me that 50,000 refund. You can't ask. You can frame that scenario and you can send it to WhatsApp. I will tell you. Sir, here they are given the situation. As per the situation, they will give you that method name also. Don't overthink, sir. That is only my suggestion. If you have any doubt and you can frame that entire scenario, I will solve. Definitely, I will solve. So, no joking, sir. No seriousness also. Just I am saying, if this question is a reverse also, we can do. But definitely, so they are saying the tax rates. That means you have to give the what global income or only on that that country income, and what is that sparing method or any method. If you are framing the that entire scenario, we can solve. Otherwise, sir, what will be the scenario if that vice versa cases? I can't explain now. Okay, now next method. So this is a danger method. Maybe you will not accept in a short time, but I will tell you, I will close it down. Definitely you will not accept this method, but I will tell you, I will close it down within some time. Listen carefully. Indirect credit method, that is only what underlying credit method. Indirect credit method, I will tell you that what underlying credit method. So now, one example I will tell you. Sir, listen carefully. Again, if you are asking I will not waste my time with respect to this method, sir. So it is an underpopulated, most not frequently used method also, but we have in our syllabus. That's why we will discuss this method now. Before going to that, next concept. Before going to the next concept, listen carefully, ma. Mr. A is a resident and ordinary resident. Same example I am taking, ma. He having that Indian income 10 crore. He having the foreign income 2 crore. What is the taxability in India? In India, ma. So total income is nothing but 12 crore. What is the taxability in foreign, ma? What is the taxability in foreign? Is nothing but 2 crore. What is a double taxed income? Just I want to write it down again. Double taxed income is 2 crore. So this double taxation is called as judicial double taxation. This is called as what, ma? Judicial double taxation. Now I am giving the name, ma. Sir, why we can call it as a judicial double taxation? I will tell you again. One income taxed in the hands of same person. One income taxed in the hands of same person in two different countries. So same person hands. So what is a double taxed income? 2 crores. Once it is in India, another time it is in the foreign country. So that's why this type of taxation is called as what, ma? Judicial double taxation. Now I will create one example, ma. Now I will create an example. It is in jurisdiction outside India. So this is in jurisdiction India. This is in jurisdiction India. So one company is there. That company earned the profit 10 crore, ma. So they have in that profit 10 crore. Yes, we are earning the profit. So okay, this 10 crore is taxed in the hands of this company, yes, ma, in outside India. So this company is given this amount as a dividend to the shareholders in India. They are distributing it as a dividend. Now, so total amount they are given as a dividend, ma. So 10 crores they are given it as a dividend. Now here on the 10 crores, so all are Indian shareholders, ma, private company. Yes, ma. On 10 crores also, now we want to pay the tax in India. So now this type of taxation is called as an, here can you tell me what is a double taxed amount, ma? Here also we can say simply double taxed income is nothing but what, ma? 2 crores. But it is not 2 crores, ma, 10 crore. But remember, it is taxable in the hands of two different persons. But here the same 2 crores is double taxed in the hands of same person. So now this type of taxation, double taxation is called as an economic double taxation. It is called as an what, ma? Economic double taxation. Super. Remember, if that one income is taxed in the hands of one person dual times, once in India, another one in foreign, that is called as what, ma? Judicial double taxation. If double taxation happen on same income but in the hands of two different person, it is called as what, ma? Economic double taxation. Now many of you know this thing very well, but you have to remember this one, ma, definitely. So now if judicial double taxation is there, we can provide the relief by using 90, 90A or 91. Sir, in order to provide the economic double taxation relief, we have a MAP, mutual agreement procedure. Both the countries are entered into an agreement, that is only MAP, mutual agreement procedure. Again I am repeating, MAP means what, ma? Mutual agreement procedure. Are you clear? Now, the same theory is there. Yes, here you can observe economic double taxation as well as judicial double taxation. So now, please take this example for understanding the underlying tax credit method. Please take this example for understanding the underlying tax credit method. Now, remember, A is a parent company. It is located in country X and they have the subsidiary B limited in country Y. So, I want to summarize these things. A located in A company is located in country X and that subsidiary company located in where country Y. Now, tax, remember, sir, what is the relationship between the two companies? A limited and B limited. Who are investing in whom? A limited is invested in the B. Am I correct, ma? Because it is a holding company or it is a subsidiary company. So subsidiary company needs to give the dividend to what, ma? Holding company. So because they are invested in their share capital, that's why we have to give the dividend, ma. So that's why dividend given. So what is a dividend given? No. So out of its profits of B limited 10 lakh, they are paying the dividend how much amount, ma? 1 lakh. Example. So profit 10 lakh, ma. Out of the dividend they paid only 1 lakh. No. Other income is there. For that A limited is 11 lakh. So other income other than dividend, can you tell me what is that amount, ma? 11 lakh. But we can add this 1 lakh. Total income we can say 12 lakh. But sir, what do you mean by the? Yes, withholding tax rates means what, ma? In country by withholding tax rate on dividend is nothing but what, ma? 15%. Can I know the meaning of withholding tax rate, ma? Simply TDS. Simply what is that, ma? TDS. They will not pay 1 lakh totally to you after reducing that amount. Yes, can you tell me what is that amount? Yes, they can reduce, ma. TDS they can reduce 15,000 and they will give you only 85,000. But in your total income, while you are showing the total income of that A limited, so you have to do that grossing up 1 lakh plus this 11 lakh. Total income is what, ma? 12 lakh. So rate in country Y is 25%. Rate in country X is 30%. Remember, they are given the vice versa. Country X is 30%. Country Y is 25%. Now they are asking, DTAA between the two countries is there. But what is that method they are introduced, or what is that method they are written in their agreement, ma? Underlying tax credit method. What is the meaning of underlying tax credit method? Remember, this is a total income. Yes, Jatin, you are correct only. So what is the total income, ma? 11 lakh they have another income, 1 lakh dividend income. We are showing the dividend income as a grossing up. And can you tell me the profit of how much amount, ma? So subsidiary company profit is how much, ma? 10 lakh. So what is the tax they will collect on 10 lakh, ma? 2,50,000. Here what is the tax they will collect on 12 lakh, ma? 3,60,000. But can you tell me already how much amount of TDS they are deducted, ma? 15,000. That means already I paid tax in this country 15,000 on this dividend income. Now I can take the credit. It is a normal thing, ma. It is not a relief also. Whatever that withholding tax they are holding on this TDS, now I am taking this as a credit directly. So after releasing that important question, maybe you can realize, sir, you are given this many questions. Yes, there is a huge list of important questions. If I am given that important questions, the many students are trying to mug up that questions, are trying to learn that questions only. So that's why I haven't thought of stopping that releasing of that important questions also. The reason I will not believe in that type of important question, especially in a taxation paper based on past few attempts. So they are given that question paper in a difficult manner. I haven't thought to, I don't want to release also, but if students are asking, I will release. If they want to use, yes, they can use, otherwise they can ignore. So ABC analysis I released already. So important questions, okay, I can release, but up to students only how they can follow also. Now, remember, this method is not at all over, sir. Just concentrate first. Without commenting, just concentrate first. Now, sir, already what is the TDS related tax we paid in this country, 15,000. So now first take this amount as a credit. Okay. Because, sir, on this 1 lakh, what is that amount of tax we paid in this country, 15,000. So that's why you can take credit for that first. Next, underlying tax credit method saying as, yes ma'am, sir, here credit not only for TDS, credit is available whatever the tax you paid on underlying profit. Dividend is paid from these underlying profits. Whatever the tax you paid, for that also you can take the credit. So now I will tell you, so credit allowed to the resident not only for taxes withheld against dividend income. What is the taxes withheld against the dividend income? 15,000. Not only that amount, but also for taxes paid on underlying profit. What is that underlying profit, 10 lakh. What is the tax paid on underlying profit, 2.5 lakh. On this also, you will get the credit. Remember, underlying, in the name itself you have. So whatever that underlying profits are there, out of which dividend is declared in that foreign, for that tax also we can take it as a credit. So remember, not only for the TDS amount, sir. This is an I haven't right, sir, because I paid in that foreign country with respect to this 1 lakh. But what they are saying, out of this 10 lakh you are given the dividend, it is an underlying profit. What is the tax you are paid? You are required to pay in that foreign country at the rate of how much? I think 25%. On underlying profit also you paid 25%. That is a 2,50,000. This is also you can take it as a credit. Now, so but sir, how we can claim the credit of tax paid in the B limited country X? Both the eyes of law only. Yes, that's why we have a DTAA. Both the countries will exchange the information also, and you have to fill the proof of payment of tax. Sir, you are taking the credit. You can fill whatever amount you want or no. You have to submit the proof of payment of tax in foreign country. Even though, example, it is in India, suppose. It is in USA, suppose. Okay. Here you are saying they are deducted that what is the TDS amount, 15,000. Here you paid how much amount, 2,50,000. Definitely, while you are taking the credit of these two amounts, you have to submit the proof of payment of tax in the foreign country. Otherwise, how they will give you? You can fill whatever amount you want as a credit or no, you can't. Definitely, while they are allowing the credit in India also, they will check the proof of payment of taxes in foreign countries definitely. Are you clear? Now, I will tell you these methods again for 5 minutes. 5 minutes. Sir, why we are not consider the global income for country X? How we can consider that, Because if that is a branch we can consider, here both these do different persons, companies. It is a company, both the companies are different person. How we can consider? So in earlier example, that is an under tax pairing method, it is a branch. So that's why one person only, head office and branch. That's why you can consider that. I already solved the questions only, sir. What you are asking also, I don't know. Sir, can you solve all the methods in one question? Ma, please don't think all the methods in one question they will not give you. Please don't think how they can give you that all the methods in one question. This is only the thinking. So many faculties are framing that question. Practically all methods will not be possible in one question. Example, remember. Yes. So India and other country have an agreement. They will mention the only one method, ma. They will not method. So they will not give you that 100 methods in one question. So they will not enter into that agreement with that many methods. They will mention only one method. Okay. Remember. They will not give you, the many expert faculties can give you that type of question. Don't think about it. Again I am saying, sir, after explaining the transfer pricing entire chapter, students are asking, sir, can you give the one question for cup method and cost plus method? So that is not possible, ma. Okay. Veerraj, exact doubt you are asking. Yeah. Sir, one student asking, sir, what is the logic behind the underlying tax credit? I will tell you. So, Veerraju and all of you, just listen. So, this entire profit, if they are given as a dividend in both the countries, that isn't taxed. Remember? So, if the underlying profits totally given as a dividend, definitely in both the countries that isn't taxed. Are you clear, ma? So that's why substantial shareholding requirement if met. That means if the shareholders are invested like 90%, 99%, 100% of the share capital, then only this method can be given. Not popular method, but remember substantial shareholding requirement like, sir, I am only the shareholder invested entire amount. That underlying profit totally can be declared as a dividend to me. In that occasion, yes, that is a total amount profit is taxed. Now in my hands that is taxed as a dividend. So that's why TDS amount if they are deducted, that I will get it as a credit. But on this amount also I can get it as a credit. So remember, because while they are given the underlying credit method, yes, underlying credit method, what is the base they are taken? Suppose if this 10 lakhs entirely, 1 lakh they are given. Suppose if this 10 lakh also given as a dividend, so that is called that leads to economic double taxation. So that's why they are given the credit. Not popular one, they will not give you in exam also, but listen carefully, all of you. Please don't type your all the explanations and answers in the chat box. So please maintain the silence for the 5 to 10 minutes. I will explain you these methods again, and I will start the next method. Listen carefully. They will not give you the mix up of methods. Don't think about it. There is no concept in practical cases also. Maybe in future also, I will not tell you the type of mixed problems, etc. Out of my creativity, I don't want to create the questions. Now, remember, so for providing the relief, relief. So there is a bilateral relief. Can you tell me bilateral means both the countries are agreed together under that one agreement, that may be between the governments or between the specified association if agreement is there. In that every agreement, they will mention the method of relief also. They can mention the exemption method or they can mention the credit method. If they are following that exemption method, within that full exemption method is there. And next we have an exemption with the progression method. Now, I am telling you, yes, what is that full exemption method. Remember, full exemption means India will not collect the tax on foreign income. Foreign country only have an exclusive right to collect the tax on such income. That is only called as full exemption method. Fully that is an exempt in India. Foreign country only will collect the tax on that. That is a full exemption. Now, exemption with the progression, sir, I am exempting only, but I want to progress one thing. What is that progress, ma? Rate progress I want to do. Rate progress I want to do. In India, foreign income can be considered for increasing the tax rate only. With that help of that rate only, we can provide the relief on what, ma? Foreign income. We can provide the relief on what, ma? Foreign income. Now, yes, are you clear, Maptono? No. Next one, tax credit method. Credit means nothing but we can deduct whatever the tax you pay. That means nothing but now we can take the direct credit method. Under that we have an full credit method, ordinary credit method. Full credit means, sir, nothing but same Mr. A example, ma. Mr. A example. Whatever that amount of tax you paid in foreign country, that entire amount you can take it as a credit. That is only full credit. There is no restriction about the amount of credit we can get here. But ordinary credit means, ordinary credit method means nothing but what, ma? Whatever the foreign tax you paid, that entire amount you can take it as what, ma? Credit. But here, whatever the foreign tax you paid in that foreign country, that is restricted with the, can you tell me? That is restricted with the what, ma? What is the tax we can collect on foreign income in India? So now we are restricting. So whatever the foreign tax you paid, you can take full amount, that is in full credit. We are restricting this foreign tax with the what, ma? We are restricting the foreign tax with the what, ma? If that foreign income is taxed in India, what is that amount? Example, I think, yes, I think, can you tell me what is the foreign tax in our question, ma? I think 1,50,000 is there. But now, if the, on which amount, ma? Foreign income 6 lakh. On foreign income 6 lakh, what is the tax, ma? 1,50,000. Suppose if this 6 lakh is taxed in India, what is the tax, ma? 79, I think 733. Now, whichever is lower. Next, we can move on to the tax sparing method. Tax sparing method, that is a special credit. Sir, it is a beautiful thing, sir. So, if, yes, example, I will tell you. Sir, in India, between that India and USA, there is a very good relationship, sir. So we want to attract that investment from the USA. So definitely we can write that agreements in the tax paying. Sir, USA government will offer. In India, in SEZ, if you are invested, no need to pay any tax in India. But while they are collecting the tax on foreign income in USA, they will provide the what, ma? Relief deemed to be treated as tax paid in India. Sir, actually, they will not pay any tax in a foreign country. In this example, they are not paying the tax anything in foreign country because that is an operating in which area, ma? SEZ area. But we are felt it as a tax paid only. What is the tax paid, ma? I think 25% because the tax rate given in that country is 25%. So that is only we can take yes, and we can reduce that amount as a credit. Actual payment is not there, but we are deemed to be treated as tax paid in that foreign country. We are taking it as a credit. Now, so next, in order to remove that economic type of double taxation, they are introduced that what, ma? Like one method, underlying tax credit method. Underlying tax credit method means what, ma? Remember the same line. Sir, underlying tax credit method allowing to that resident not only for the TDS amount deducted with respect to the dividend income, out of which underlying profits they are paying the dividend, for the taxes also we can take it as a credit. Now, many students are asking the doubt, sir, withholding, na, that's correct, sir. But how we can take the tax related this? Because on this amount you paid the 2,50,000. If they are given that entire amount as a dividend, here it also this amount is taxable. But fortunately, they are given that 1 lakh only dividend. If they are given that entire amount of dividend, so definitely here it will be 10 lakh. Here double taxation will happen. That's why forwarded only they are given the what mark credit. Not only for the TDS amount, will also for that what mark tax paid on underlying profits, they are giving it as an what mark credit. So finally, what is the tax you are going to pay in India or A Limited? 95,000. Yes, here 2,50,000. These are only the methods. Now we can forward our discussion related to unilateral relief. So within 2 minutes, I will start the unilateral relief. But before that, I want to know about the, sir, first of all, if you are listening for the first time, it is a difficult to understood because I am given the nearly how many methods, sir? If you are understood, so all the methods I am trying to insert in your mind within a short span of time. This is one method. Yes, this is second method. This is third one, fourth one, fifth one, sixth one. If you are open the concept book one by one method, and after that what are the problems you need to solve also I am given one. So if you are observing the DTAA concept book, after that every method, what is the problem you are going to solve? Full exemption. After that full exemption method, you are going to solve the question number 1, question number 2, question number 3. After credit method, you have to solve the question number 4, question number 5, question number 6. After sparing, question number 7 already done. Underlying tax credit method after. So there is an example, no need to solve. This is a study material example. Directly we discuss this only that example. This is only that example we discussed in our handwritten. So first, if you are invested time, automatically you will get but I am covering that most of the questions also. So if you are observing that every question is covered in the discussion itself, don't think about it. Now I will solve the unilateral relief. There is no DTAA, section 91. Norma. (91) ma. Mostly we can get the 91 questions, that is an unilateral relief. Remember how to solve the questions under unilateral relief. There is no agreement between the countries, then we can provide the relief by using the section 91 steps. So for doing that question under section 91, we have to follow these steps. Ma. First one, SSE must be the resident. To be honest, resident and ordinary resident. He derived that income from foreign country. He paid the tax in foreign country or tax deducted in foreign country. There is no DTAA. If these 4 conditions are satisfied, then only we can solve the question under section 91. In exam also, if they are given the question under section 91, you have to mention all these 4 conditions as a note point. Ma. So then, what is that conditions? Ma? Resident and ordinary resident, he having the foreign income, he already paid the tax in foreign country, automatically he is a resident and ordinary resident, same amount is taxed in India, there is a double taxation, so there is no DTA, that's why automatically we have to follow that what ma section 91. Step 1. So please remember the steps, and we can't follow that exactly steps, but we are following this methodology for doing the sums. Ma. Please calculate net total income. How to calculate net total income? Ma? Indian income plus foreign income, it is called as gross total income. Minus, if you are reduced, minus chapter 6A reduction, then you will get what ma? Net total income. Find out the gross tax. Sir, what do you mean by the gross tax, sir? I will tell you. Please calculate the tax after adding education cess and surcharge. Yes, ma? Please add the surcharge and education cess. After Please calculate directly tax including surcharge and education cess. But before what ra? Before claiming TDS, TCS, AMT, MAT credit, self-assessment tax, advance tax, etc. Sir, if I am claiming this credit, this tax is called as net tax. This tax is called as what, ma? Net tax. But remember, before claiming this credit, after adding the surcharge and education cess, that is only called as gross tax. Step 3. Please find out average tax rate in India. So simply, gross tax divided by net total income into 100. Gross tax divided by net total income into 100, that is only the average tax rate in India. So what is the tax rate in foreign, you can calculate. I think Minnu, you are asking, sir, in which method we have to compare? In 91 only we have to compare Indian average tax rate with the foreign tax rate. If they are mentioned in the question directly, or you have to calculate the tax in foreign as well as foreign income into 100, you will get. So please take the lower of the following. Step 3 as well as step 4. Whichever is lower you can take, and on the double taxed foreign income, not on foreign income, on double taxed foreign income, you can apply and you will get the relief under section 91. So now maybe you will get the clarity after doing the 2 or 3 sums. Listen carefully. So these are the steps. No need to give the headings in that every question as in steps, but we have to follow the same methodology. Step 1, net total income, including net total income. Then after gross tax, what do you mean by the gross tax? After adding that surcharge and education cess before claiming these credits. So tax rate in India and tax rate in foreign country lower. That lower rate only we have to apply on double taxed foreign income. Lower rate only we have to apply on what, ma? Double taxed foreign income. Are you clear? Now. So directly, okay, same question we have in our workbook also, but we can try from the ICMI workbook. Same question we have. Yes, same question we have. Okay, but the question we can take. Yes, ma. Remember, Shubham is an sports good merchant. He is a resident and ordinary resident doing the business in India as well as abroad for the previous year 24-25. What is that? Indian business income. Indian income is nothing but 28 lakh. Next one, combined point, income from business in country A, which India is not having that agreement. There is no DTAA. Can you tell me? Country A business income is nothing but what, 12 lakh. It is a foreign income. With that country A, India is not having the DTA. So it is a foreign income, but what is the tax on that foreign income? They are mentioned clearly. So this is a tax in country A. So these are all the points are related to country A. Now country B, we have a loss. Remember, this is a loss with respect to the business in country B. Now, so PPF, that is an eligible for ATC deduction. Life insurance premium paid. Remember, life insurance premium, it is covered under ATC. If you are paying the life insurance premium, it is covered under ATC. If you are paying the medical insurance premium, it is covered under what, ma? ATD. Yes, ma. Life insurance premium on self, spouse, on children, if you are taken, then only you can take the deduction, ma. Yes, here your family, that is in self also, Spouse also okay. Children means here dependent children ma. So 80D, D means nothing but remember dependent children. But you can take on parents also, that is covered. But here life insurance, that is also not given. But in this question, I think SSC following that 115 BAC assumption ma. But in workbook also they are not given. But default tax regime assumption we can take. So that's why there is no chapter 6A deductions. There is no chapter 6A deductions ma. But okay, they will not give you. In my book, I am given by using the normal tax rate. You can go with that workbook also. I will show you that question ma. Same question, this one only. Question number 9. Sir, why I am given always normal tax rate? Then only your chapter 6A deductions knowledge can be tested. 80D is not covered here. Why? Because life insurance policy, if you want to take, yes, as a deduction, you have to take this policy on your life or your spouse or your children's related life only. Am I clear, ma? Definitely in exam, they will give you the normal tax rates only. Okay. But now, sir, first, what is the tax step, ma? There is no DTAA in both the cases, ma. There is no DTAA in both the cases. That's why. First step, please calculate net tax. Sorry, net total income. Gross total income. Remember, Indian business income is there, foreign business income is there, but foreign loss is there. We can set off all the things, ma. I think you have to know about one point. Foreign business loss can be set off against Indian business income also. Ultimately, 35 lakh is there. So, tax if you are collected, yes, this is an tax amount. What is that average tax rate in India, ma? This is an average tax rate. In foreign, you have to calculate, ma. How can I calculate, sir? 3 lakh tax on 12 lakh amount. Please calculate. Yes, you will get the 25% is a tax in the which country, ma? Foreign country A. So now double taxation is happened with respect to the country A only. So that's why country A rate is nothing but 25%. Whichever is lower, ma, 21. Double taxed foreign income is 12 lakh. So 12 lakh is taxed in foreign country and 12 lakh is taxed in India. So that's why on this 12 lakh, you can apply the 21.99. This is only called as what, ma? Double taxed foreign income. So what is a double taxed foreign income, ma? Yes, 12 lakh. On this you can apply 21.99. You will get this amount as an relief. Are you clear, ma? All of you, please give me confirmation about this question. Yes, if you have energy, we can solve the question number 4. Definitely it is a new question. Definitely it is a new question. Yes, it is a new question. You have to understood this question and somewhat lengthy also. Remember clearly. I want to solve this question number 4. Kavita, A63 ma, please observe senior citizen, resident and ordinary resident, classical dance performer. She is an artist. During the previous year 24-25, she earned the income from India as well as country X also. So there is no DTAA. Remember all the 4 conditions satisfied, ma. Resident and ordinary resident. Foreign income is there. On that tax also collected. So what is the tax? Yes, tax also collected. There is no DTA. That's why section 91 problem. Now, first, rental income from the country X. They are given the XCD. Okay. They are given the foreign currency, ma. What is it foreign currency? 28,000. Municipal taxes also paid this an amount, ma. And conversion rate to India, you can convert, yes, ma, 70 rupees per one XCD. Like dollar, ma, XCD means you can assume, but they are given the XCD currency. That means a code they are given. Now we can calculate income from house property directly because, so we have to calculate net total income, ma. In order to calculate the net total income, first we have to calculate income from house property. They are clearly given. What is that exchange rate also? This is in what gross annual value you will get. This is in gross annual value you will get. If any municipal taxes paid, you will get the deduction. Remember, foreign municipal taxes also can be allowed as what deduction. Conversion rate 70. What is that net annual value? This amount is called as a net annual value. From this you can take the deduction at the rate of 30% NAV. Is there any interest on borrowed capital mentioned in the question? They are not mentioned. That's why it is only finally income from house property in India. So can you tell me what is that amount? 13,59,750. Now forward to the next point. Professional income. Professional income. Yes, that means remember in India, what is that concerns related income? 16 lakh. What is that income related to concerns in foreign country? 11 lakh 20,000. It is a taxable under the head PCBP. Concerns in India direct amount. Concerns in foreign country, yes, you have to convert by using the same rate. What is it? PCBP amount 23 lakh 84,000. Net total income means Indian income, foreign income, both together we have to take. Next, fixed deposit interest, interest on savings account. These two things under which head of income? Income from other sources. Yes, you have to add these two things also under income from other sources. You will get which income? Gross total income. After adding that all the incomes, you will get the gross total income. What is the gross total income in this? Yes, if you are doing the total of these three things, you will get the gross total income. From the gross total income, we have to reduce the chapter 6A deduction. Now you have to observe the chapter 6A deductions. So, PPF related, you will get ATC. I think one person asking, sir, what are the chapter 6A deduction? These are only the things are important. My ATC, ATD, mostly repeated, and 80 QQB, 80 RRB. So, first you have to learn ATC and 80D, 80 TTB, 80 QQB, sorry, 80 TTB, 80 TTA first, and 80 TTB. Next, section 80 RRB or 80 QQB. So these are the most repeatedly they are asking. First follow this one. So if you know this and some, definitely you can do all the problems also. Now remember, 5-year term deposit is done but not eligible for deduction. They are given. Now medical insurance premium. Can you tell me the medical insurance premium is nothing but what? 27,000 and 31,000. Self-spouse. So senior citizen, the limit will be restricted to what? 50,000. Remember. So normally for your family 25,000 limit is there. For your parents' family 25,000 limit is there. Medical insurance premium related. But if you any person is senior citizen, that limit will be increased to what? 50,000. Now overall 50,000 only 80D. Next, indirectly here, fixed deposit related, savings related is there. Yes, you can take the what? 80 TTB. If you are a senior citizen, you can take directly 80 TTB. So altogether we have a more amount, but the amount is restricted. That is an 80 TTB is restricted with the what? 50,000. Yes, if you are a senior citizen, don't go for 80 TTA. Directly 80 TTB is best. You will get the what? So directly 50,000 limit. So reduce the chapter 6A reduction. You will get the what? 38 lakh 37,019. So you have to rounding off your total income as per section 288A. After that you can calculate the tax here. SSE is following the, yes, not following the 115 BSE. That means he is following normal only. That's why we are taken these chapter 6A deductions also. So tax payable you can calculate in your free time. You will get the tax payable this amount. What is that average tax rate in India? Yes, how to calculate? This is a tax amount divided by this net total income. You will get this amount 26.5. What is that amount you will get? 26.5. Akka, you have to hold for 1 more minute, ma. Next question that only you have to hold. Okay. So medical expenses paid, not medical expenditure, medical insurance premium you paid for the non-resident. That restriction is that amount limited to 25,000 only, not for 85. Medical expenses paid for non-resident citizen, non-resident senior citizen. Please confirm that is an medical insurance premium or medical expenses. Please confirm that is a medical expenses or medical insurance premium. Now, please remember, okay, forget about it. Now, what is the rate in foreign country? Ma? They are given in this question 20%. Yes. Please observe. Yes, please observe. Whichever is lower, ma, 20%, you can apply the 20% on. We can apply the 20% on. Double taxed foreign income. Can you tell me what is a double taxed, ma? In India, this is a taxed. In foreign, maybe highest amount is taxed. But in India, this amount taxed. And this is also taxed. Sorry, 7,84,000. What is a double taxed, ma? 13,59,750 and 7,84,000 foreign income. In India, it is taxed. That's why, please remember, this is only the double taxed foreign income. On the 20%, you will get the relief after the tax liability. This one only. Now, again, without wasting our time, we can solve the last question given in our workbook also. It is also important. This you can do, ma. This you can do. This is an easily you can do. SSC is an resident and ordinary resident only. But here one point you have to take. He is taken the old regime only. What is the point? Premium paid for medical insurance, non-resident father. He is a senior citizen. But if he is a senior citizen, for your family, for yourself and your spouse and your dependent children related, you can take one limit, and your parents related, yes, you can take the one more limit. So they are senior citizen. That's why you can take up to dependent children. Yes, your parents also senior citizen. That's why you can take additional limit of what, ma? 25. That means total 50. But here non-resident. That's why restricted with the 25,000 only. Next. Sir, if any loss adjusted with the foreign income, double tax, yes, reduced only, sir. Reduced only. Next one. Last question I want to do on this, and last question I want to do completely with respect to the question number 6. Please go through it and remember, many students are trying to ask this frequently one question, sir. Sir, with these revision classes I can pass. Can I pass? Sorry. Yes, if you are trying to solve on your own also. After listening these classes, you have to do the practice, sir. Without solving the question, you can't. Definitely, if I am saying this, many persons will not agree also. Without solving some questions on your own, you can't clear your exam. You can listen for n number of times also, you will not clear your exam. You know concept, you know all the things, you are a very intelligent person, but without practicing the questions, without practicing every model one question, you will not do that entire exam within 3 hours, definitely. So remember, at least per one model, you have to solve one question. And what are the changes for each and every question, you have to try to make a note. Okay. Now, last question, ma, remember. SSC is, I want to solve this question in detailed manner. Remember, in detailed manner, remember. Now, illustration 6. A popular Kollywood star, that is an, I think Mohanlal place, they are replaced with the, okay, Sananlal. Okay. No. So he having business interest in few nations. Well, he is a resident in India, and he earned the following incomes. Ma. Remember, in crores they are mentioned. Ma, don't forget. Income from house property computed means final income they are given. So business income, that is an Hyderabad superstar team owner, he having that income 12.4 crores. Acting in movies also he having that income, that is nothing but 9.415. So can you tell me, this is an income totally earned in India. Then what about the foreign income, sir? Foreign income. Next, son-in-law. Okay, that means Mohanlal, okay, whatever it may be. They deposited 1,50,000 in PPF and they paid the insurance premium is 1 lakh. Can you tell me what is the deduction you can take, ma? ATC. But ATC overall limit is 1.5 lakh. Don't forget that. So now he having that income along with the country India, he having that income in country X and the country Y also. What is that country X income and the country Y income? In crores only they mentioned. Don't forget. Loss from house property. I think you are Abhishek. I think you are asking this point only. The loss from house property. So only X country X loss from house property is there. So business income in both having the profits only. Next, share of income from the partnership firm. Sir, many of you know, if any share of income received by the partner from the partnership firm, that is an exempt or taxable, ma. That is an exempt or taxable, ma. Exempt. Remember, if partnership firm is giving the share of profit to partner. So because they are already paid the tax at the rate of 30%, now if they are given the share of profit to the partners, it is exempt because in India only they paid the tax. Indian partnership firm already paid the tax at the rate of 30%. Out of that only they are given the share of profit. It is exempt under which section, ma? Okay, if you remember 10 subsection to capital A. So it is not applicable for the foreign partnership firm. It is not applicable for the, this exemption is not applicable for the foreign partnership firm. Yes, if he opted, he will not get any deduction. Don't think about it, okay? We are not into the climax, that's why. Remember, this point is not applicable. That means she is asking about, sir, 115 BAC opted, sir. So there is no ADC deduction now. So what is the reason, sir? Because in India, 30% already partnership firm paid. That's why on this share of profit, no need to pay tax. But remember, foreign partnership firm paying the tax in the foreign country, if they are given that share of profit, there is no exemption available in the hands of partner. No. Agricultural income is there. Yes, ma? Agricultural income also there, but that agricultural income in which country, ma? Country Y. These lines are important, ma? Country X. Share of income is not exempt. That means what, ma? This is also taxable in that country. Loss from house property is not eligible for set off. Loss from house property is not eligible for set off against other income. Sir, in country X, yes, ma. What is that, ma? In country X, it is taxable. And this loss is not eligible for what, ma? Set off. While taxing in the country X, they are taxing this amount. There is no exemption for that. But they are not allowing the set off of this also. In country Y, agricultural income is also taxable. Sir, they are given the, yes, ma? Remember, they are given these lines for how SSE paid the tax in country X and country Y. What is the country X ma? This isn't taxable. This loss is not allowed to set off. Agricultural income is also taxed. No. In country X, he paid the tax. In country Y, he paid this amount of tax. Now they are asking the tax liability. Remember, in this question, we have to solve the problem in country-wise manner. Because both the countries are there, both the countries related income is there, both the countries, we don't have any agreement with the what ma? Both the countries. In the question, they are given or not given ma? Oh, they are given. With that, both the countries, India is not having the DTAA. That's why definitely we have to solve. Now, please take net total income we can calculate ma. First, house property. Remember, in foreign while they are paying the tax, yes, ma, this is a tax payable. This is not allowed to set off in country X. But in India, in Indian house property that is an 4 crore 30 lakh, we can set off the foreign amount of an house property loss. Many students are asking, sir, here not allowed to set off, sir. It is in foreign, but in India, we can do set off. Now, first house property issue over. Now, PGBP. Remember, we having the business incomes 2, business income 1, professional income 2, that is an 12.4. Now, Hyderabad acting in movies how much ma? That is an 1. But now, this is an business income in India. Then what about the business income from country X ma? Can you tell me? Country X related, what is the business income we have ma? Only this one. But now, this is also taxable in India. In foreign it is taxable. Now, here also we are giving the tax. Can you tell me? 4.8 lakh, 7.2 lakh. Why we are taxing ma? Because exemption is available only to that Indian partnership form. Here it is a foreign partnership form. That's why in India also that amount is taxed. So clearly they are saying yes, that amount taxed in foreign also, in India also. This is also in foreign taxed, but now in India also this amount is taxed. But they are not doing the set off in foreign, but now we are doing the set off against the what ma? Indian house property. No. Business income from country Y. Sorry. Business income from country Y. Please check it out. What is a business income from country Y ma? 2.9 crore. Yes, you can take the yes 2.9 crore. This is an ultimately yes ma business income we have. Sir, next other sources is there ma? Yes, agricultural income, foreign agricultural income. Can you tell me? In foreign also that is taxed. Now in India also that is taxed. Because it is a foreign agricultural income. Now in India that is taxed under income from other source. Now please calculate total ma. So 3 crores plus 36 crores 71 50,000 plus 1 crore 20. Totally what is that amount ma? 40 crores 91 lakh 50,000 is a gross total income. Chapter 6A deductions are not available because SSE opted the 115 BSc. So now total income is 40 lakh 91 50,000. So please calculate tax liability ma. You will get this amount as a tax liability before relief. So remember here we have to apply the surcharge at the rate of 25%. Because the total income is more than 2 crores is there. What is the maximum surcharge rate we can apply? 25%. I think many students are forget about the tax rates continuously. Remember. Now, before relief this amount. Now we can calculate the relief in country X one time. In country Y one time. You have to aggregate the two things. Finally, we can reduce from the tax liability. Now, remember, business income is how much? 7,20,000. Sir, in country X, remember, what is the double taxed country X? Yes, this is an already taxed in foreign here also. These are already taxed in foreign here also. But in India, this amount is reduced because while taxing that amounts in India, this amount is reduced. Now, double taxed amount means we can say, yes, this amount also taxed in foreign as well as India. But in India, while calculating the tax, we are reduced this. That's why double taxed income is reduced. Abhishek, your point only. In foreign, yes ma, we paid the 7.2 crores and 4.8 crores related tax ma. Because house property loss, we are not doing set off here. But in India, yes, we are paying the tax on 7.2 crores plus 4.8 we are doing. But we are set off the what ma house property loss. That means what is that effectively taxed amount ma? Yes, if you are calculating, it is only that what ma double tax. In both the countries, what is that amount is double taxed means? Yes, please summarize. It is in 10.7 crores. It is in, yes, how much ma? 7.2 plus 4.8. It is in 12 crores. In both the countries, what is a double taxed ma? 10.7 crores. So that's why on this you can apply the rate ma. Sir, why you are applying the rate, sir? Reason, here we calculated the rate properly, remember. Here they are calculated the rate separately as a working note ma in India. So India, what is the rate? India, what is the rate? Yes, in this only you can calculate ma. This is a tax liability on this income. Yes ma. 15 crore 91 lakh 65,500 on this income. Yes, how much you got ma? 38. Yes, in country X, can you tell me? In country X, what is a taxed amount ma? Remember, in country X, what is a taxed amount ma? Yes, it is not exempt. It is also not eligible. This is an amount. Can you tell me? 12 crore. Yes. On 12 crore, what is the tax paid they are given ma? It is an 2.16 crores. Can you tell me? On these two amounts only they paid 2.16 crores. Average tax rate you can calculate. Yes, 2 crores 16. You can calculate rate. You will get 18 with the X. Y also we can calculate ma. Can you tell me what is the tax paid ma? On these two things, yes ma, 2.9 plus 1.2, 4.1 crores are there. How much tax paid? 80 lakh. 80 lakh tax on 80 lakh tax on 4.10 crore. What is the tax rate ma? 19. So this is only the lower, this is only the lower with respect to that ma. Now you can apply the 18%, you will get this amount. No. Remember the same way, what is a double taxed ma? So these two are taxed in foreign as well as these two are taxed in India also. So that's why double taxed income this one. On this we can apply the rate. Yes, you will get this relief ma. Both the countries together if you got relief. Yes, this is in 2 crore 72 lakh 60,000. Already they are given as an computed, means all deductions are already taken ma. Computed means it is a final income from house property after taking the all deductions. Yes, this problem you have to solve. Sir, many students are not at all starting the solving the questions and they are imagining as it is an difficult. No need to felt it as a difficult ma. This is an Indian income details. It is an country X details. It is an country Y details. In country X, what is the taxability? In country Y, what is the taxability? They are given. But you have to remember only one point: foreign partnership firm share of profit is taxable in India. There is no exempt. And foreign agricultural income also taxable in India. And we have to stick to the same thing. We have to stick to the same thing now. So it's already over now. So I'm given this some important instructions. Listen carefully. I'm given these some important instructions. Listen carefully. In DTAA chapter, relief related methods of problem practically you will get wrong. So that may be 90, 90A or 91 you will get. Second one, you have to refer PE concept. Yes. Permanent establishment concept we have in our concept book, and in workbook example you have to refer this permanent establishment concept without any fail. Yes, mandatorily we are getting MCQs. Yes. After that, just refer these two questions. No need to refer any extra concepts also. Just refer these two questions only. Now, next, they are given the questions from FTC also. What is that FTC? Foreign tax credit. Whatever the taxes you paid in the foreign country, on that, yes, can you tell me? In every problem we discussed the foreign tax paid. That foreign tax you can take it as a credit in what India. So for that only they are given the rules. Yes, you have to give the plain reading of these provisions and yes, plain reading of this provision. And we have two questions. One is a theory and 23rd question you have to refer definitely. Remember, these are the self-study. So if I am taken also, I will take a lot of time. So no need to worry. Yes, listen. Yes, remember permanent establishment as well as FTC. Yes, give me 1 minute time, I will tell you. Yes, give me 1 minute time. So we are maintaining this. Yes. If anyone wants to listen these two concepts also, yes, you can refer EO batch day 2 video is there. In that first, I think exam oriented batch, I am taking the nearly like 45 minutes time also for these two concepts. If you want to get, yes, you can listen. Sir, in country X rate to be calculated, yes ma? No, country X, yes, clearly they are saying this is only that income, but we can't do the set off. That means share of income is not exempt. That's why we are given the tax. But loss from house property is not eligible to set off. Is question itself silent? Yes, you can reduce the set off. Okay. Now, remember, these two you want to refer, yes, you can. Otherwise, you can prepare on your own also. Yes, many times they are given the direct questions from the permanent establishment concept also. Many times they are given the questions from the permanent establishment concept also. Last one, models of DTA. Now I want to take this thing. Models of DTAA. In live videos folder, you can find the EO batch day 2 and you can refer these two concepts also. and the remaining problem solving, and if you want to get any extra concept also, you can refer. No, remember. Last concept, sir, why you are taking the small concept, sir? Because we can refer from that video, but you can, but pakka 2 marks MCQ always from this concept. Pakka 2 marks MCQ. So different models of DTAA means simple ma, listen carefully, within 5 minutes we can conclude ma. OECD model, Organization for Economic Cooperation Development model. Yes. So developed countries like Australia and like UK or like Japan, if both the countries, if they wants to enter into the DTAA, they will use the OECD model. Between the which countries ma? Developed countries. Now, it advocating the which principle ma? Residence principle. Residence principle means what ma? Resident country having right to collect the tax. It isn't different to our method ma. Yes, that means who having the right ma? Resident country having right to collect the tax. Resident country having right to collect the tax, and the source country will maintain the what ma? Silent. So now we are going to discuss the UN model, that is nothing but between developed country and developing country. Yes, example Australia and India is there. Both the countries are entered into agreement. Definitely that is an what model ma? UN model. You know already. Yes, it advocating the which principle ma? Source principle. That means we are given the preference to source country. That means which country have an right ma? Source country. That means foreign country or nothing but, okay, you can write as source country only. So source country now have a right to collect the what ma? Tax. Source country have a right to collect the tax. So this is only we are discussed in the full exemption method. We discussed based on this model only. Resident country will maintain the silence, sir. Foreign country will collect the tax. That is as per which model we discussed ma? UN model. But if you are following the OECD model, that advocates the which principle ma? Residence principle. That means this is only our model. So that's why most frequently asked MCQ is, most of the Indian treaties are based on what model ma? UN model. So if they are given the preference to that resident country, yes, in this UN model they are given the preference to source country. So if any country wants to enter into agreement with the USA, that is only USA model. So remember, these lines will give you the 2 marks. Definitely. So different models, that means how we can write the terms in that DTAA. So if you want to follow that OECD models, it will be applicable for that between the developed countries. So which principle ma? Residence principle. So resident country is dominating here. They will collect the tax. Source country will maintain silence. But UN model, it is only our model. We are discussing the all the things as per this model only. Yes, if you are observing in full exemption method, we discuss the same thing. What is the thing ma? Remember, between the developed and the developing nation, we can enter into agreement. Yes, which principle here? Yes, advocating means importance given to that which principle ma? Source principle. Source means source country have a right to collect the tax. Resident country will maintain the silence. This is only the DTAA from my side. Remember, and many students wants to get some more additional questions also. Additional questions means solving related. yes, definitely you can watch the day 2, or yes ma, if you want to get the some parts like relief related part, if you want to get, yes, EO day 1 is also there. If anyone wants to get the clarity about the some methods again, you can watch these videos. And remember, my channel is not at all monetized. I don't want to get the monetize also. And if you are viewing that videos one more time, I will not get any money, and that is a clarification I want to give you. Okay, maybe you are saying, sir, you are getting that YouTube revenue. Na? I don't want YouTube revenue. Okay, remember, if you want to get the clarity again about the methods, yes, you can watch this EO day 1 video last, and EO day 2, one of the student already, yes, pinned the time stamps also. You can watch in accordance with that time stamps. And again, if you want to watch this video again, yes, you can watch also, no issue. So this is on only, but many students are thinking, sir, you are not covering these two concepts, means these two are unimportant. No, not unimportant. So due to time constraint only, I am not covering, because our time is allocated the morely related to these methods, because these are very important. But P also important only. So if any doubts are there, you can ask. We can spend for that 5 to 10 minutes. Then after we can close this session. Now, if you have any doubt, yes, you can ask. Love you. Yes, shall we close? Thank you. Have a nice day.